Welcome back, guys. Today I want to talk about gold and why it's a good investment, why it's a bad investment, why people invest in it, and what is gold. How are your fundamentals on what gold is? We all know that gold is, let's say, a metal, a precious metal which people value. You've seen people have gold jewelry and attach value to it. But in terms of investments, where does gold stand? So if you think about it, gold has traditionally been seen as a hedge against inflation, against the decline in value of paper currency. So just as an example, imagine that a guitar was $50 in 1950 and you could have, and let's say an ounce of gold was also $50. You could have bought that guitar using your ounce of gold, or you could have bought it using $50. Well, if you try to buy a guitar for $50 now in 2021, you're going to find out that it's a lot harder because the prices of guitars have risen against the dollar, against that paper currency, because the value, essentially inflation is just that, the value of your money, your notes is declining over time, and because of that, you can't buy the same good in the future using the same amount of money. But if you held on to that ounce of gold, right now it's priced at around 1,750, somewhere in that range for an ounce of gold. You can buy several guitars now. This is not the best example, but kind of shows you why gold has maintained its value over the years and why it will continue to maintain its value over the years. Because while the value of your paper currency declines, the value of gold keeps up with inflation. That's kind of the idea. And so if the price of the guitar obviously rises, or the value of your dollars falls over time, if you held on to that gold, that sort of tangible asset, precious metal, then you could still buy the same stuff. And so that's why investors regard gold as a hedge against inflation. So we can also talk about gold and its history. 2000 BC, ancient Egypt, how it was used to create jewelry, and how that was this starting point for when we first started attaching value to gold. And then years later, how it became a coin that humans used in their transactions, a medium of exchange, the economist term for it. I'm going to skip over all that and we're going to go right to the sort of thick of it, where we're going to talk about the US dollar and gold. I just realized the sun is setting, strangely enough, and my lighting has completely changed. It's okay. So we're going to talk about the US dollar. So traditionally, when the dollar declines, gold rises, and it's also, so in that sense, it's a hedge against not just inflation, but it's also a hedge against a decline in the dollar. And this is particularly interesting for US investors, because if you think the dollar is going to crash, gold might be a good bet. And there's several reasons for it, but the first is that gold is denominated in US dollars. For whatever reason, well, we can go back to the gold standard, or for whatever historical reasons, gold is denominated in US dollars. So we say an ounce of gold is 1,750 US dollars, for example. And so if you wanted to buy gold, you would sell dollars. And so that's one effect. So even the act of buying gold has this sort of negative pressure on the US dollar, because people are selling dollars. And the other reason is that if the dollar declines, this makes gold cheaper for international investors. Because if you had, say, British pound or euros or Sri Lankan rupees or whatever you had, and the dollar is declining and gold is denominated in dollars, then to buy the amount of dollars required to buy an ounce of gold would now be cheaper for you, because the dollar has now fallen in price. So the dollar declining means that more people will now rush into gold, and that will lead to higher gold prices. So yes, it's also a hedge against the fall in dollar. So gold is also a hedge against political uncertainty, socio-economic unrest, all these things, because if the currency of if you believe that the currency of your country or the currency of a certain country in the midst of war would collapse, or your investments would collapse, you would invest in sort of this physical store of value, gold, which retains its value regardless. And so it's also a hedge against that. The other thing about gold is that it's a diversifying investment. And what that means is that it's generally not correlated with stocks, bonds, real estate, and all these other asset classes. Well, debatable, but there's certainly not a strong correlation between gold and these asset classes. The other thing I really want to touch on is investing in gold stocks or gold mining companies. And this usually generates a higher return than investing in just gold itself, the physical asset. And that's because if gold price moves by say 1%, you usually see a greater than 1% increase in the price of a gold mining company. And that's generally because gold mining companies are quite stable, quite profitable. They tend to pay out dividends as well. So you make income and you also benefit from that stock price growth. But at the same time, the mining sector in general, not just gold, but mining in general, is a very volatile sector. The prices are heavily dependent on the commodity markets, obviously, which is heavily dependent on the macroeconomic environment. Gold prices could move for any reason. It could move for no reason at all sometimes. So what about investing in gold? So you can invest in gold in a few ways. You can buy jewelry, you can buy gold coins, you can buy gold ETFs, you can buy gold itself, you can buy gold futures. There's so many ways to invest in gold, and some direct and some indirect. But the one thing I will say about gold is that it has it has been a good long-term store of value. It hasn't lost its value in the same way that paper currency has. But you shouldn't expect to do more than just keep up with inflation. You can't expect to make ridiculous amounts of return on gold. It's just supposed to keep the value of your money. And this naturally brings up the question, should I invest in the stock market or other types of investments over gold? And this is a bit of a tricky one. So, in around 2002 to 2008, 2012, gold actually outperformed the stock market, at least in the US. And from 2010 to 2018, around that period, gold did far worse than the stock market. So this really depends on when you buy gold. And a lot of the time investing is just that. You're buying at the right time when prices are low. And if you manage to buy gold when the prices are low relative to its historical values, and you're not buying at a peak, then you're likely to do better than when you buy at a peak. So timing and getting in at the right time is important, and being patient sometimes with your investments, that's also important. So before you make any investments, don't take any of this as investment advice. Have a look yourself. I personally think that gold is a little bit expensive right now, but that's just my view on it. And there's so many ways, like I said, there's so many ways to invest in gold, and I'm not speaking for all those ways. But thanks so much for watching, guys. If you have any video requests that you want me to make videos on, I'm very happy to just drop it in the comment section, or send me a message on my Instagram page, Diversifying Investments, and I'll be sure to make that my next video. I'll see you guys next week.